Good morning, everybody, and this is your S&P 500 day trade setups for today. So, what can we say? On Friday, we had a bit of a rally, and just basically market sentiment and some rumors about rates cuts expected in the latter part of this year. So, anyway, we are back. There's just two things we need to pay attention to. So the first one is we are back at this bit of structure here, and you can see it being fairly difficult to break through this zone. You can see I've got both levels in, and it goes all the way back to January, so we've really been trying very hard to break through the highs of January. And you can see, where did we close? December highs down here, but then we got a high in January, but we haven't managed to get through that again. We do have a channel break here. We've got a grouping of the oscillators to the downside. So that is something we need to pay attention to. So as soon as you start drilling down through the time frames, then you start seeing a different picture here. So if you look here, we've broken through the moving averages on the hour. But have a look at the oscillators here. The oscillators are grouping to the upsides here at the moment. So if you look at this from an hour perspective, above and below the moving averages, nothing really that you want to be trading when it's this volatile. So what I would be doing is pay attention to the structure lower down, because that is going to give us the indication. So this is a range break, or channel break, should I rather say. We do have a bit of a rejection here of some profit taking. I would expect some kind of a pullback on structure. The first bit of structure is 41.16 and obviously 41.05, but 4100 would obviously be a big round number as well. Now, if you get down to the hour and have a look at what we have here, we've got a little bit of a different picture, a bit of a crossover brewing. The zone stays the same. So the level that we should be looking to buy into stays exactly the same. Oscillators have started to separate slightly. So yeah, I think what we're looking for is a continuation to the upside. And it's going to be, you can see this one was tested late in the session on the 15-minute. So just add another level here on the 15-minute, which is going to be that swing high there. So that would be another area, 41.29. I want to make sure. Oh, okay. I'm going to add one more level here because there's something here right over there. You can see we kind of rejected it there, then we broke through. So you're looking for a pullback to 41.25.8, so 41.26 or 41.29. So if you're looking for price action there, that's the first step. And then you're looking at 41.16 and then ultimately 41.05. So that's kind of the view that I've got. I'm looking for price to consolidate in one of those areas for a break above 41.47, which should be 41.50, and we should target 41.78. So that's kind of the view that I've got at the moment for this morning. Bear in mind that the UK has a public holiday today, so a lot of the volumes in the European session comes out of the UK, so that means that the UK session is going to be a little bit quieter than normal, or sorry, the European session, should I rather say, is going to be a bit quieter than normal. So just keep that in the back of your mind. You may have to wait for the US Open before this starts giving us anything. But again, just keep the 3 hour in the back of your mind. It's above and below, very volatile. Could just be setting up for a bigger range. So I would expect these two levels to be resistance at the moment. Oh, you don't want to be buying here. You want to wait for a pullback onto structure, see that the structure holds, then look for the opportunity to the upside. And then lastly, what we are looking for ultimately is a measured move, but take that with a pinch of salt. And you can see it's basically back to the top of the range. So this level at 41.78 is the right level to pay attention to. Anyway, guys, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.